This morning we're speaking with Sam Harris, who's the president of JetLoan Capital out of Stuart, Florida, which, as I understand, is about 100 miles north of Miami. I see Sam regularly at the Embraer events at their factory in Melbourne. I'm just giving you data. As we go through this thing, if you have a question, make sure that you type it into us so that it'll be passed on to me, and then I'll interrupt Sam. And don't worry about interrupting us when we're talking, because I'd rather that you got your question in during the part of the subject or the part of Sam's presentation, so that we can go back to the slide that you're talking about. But those of you who've been on this before, maybe this is the first time, the first thing I'm going to do is play a little video for my company, and here it is. Let's talk a little bit about how to fail and wind up paying the state of California tax that you didn't have to do. By not hiring me beforehand, okay, of course, I'm arrogant, I'm confident. The reason I'm confident is if someone hires us before they take possession and follows all of our instructions through the test period that they've chosen to use, they're not going to fail, okay? Recently, I became aware of a case that a lawyer sent to me, said, can we help? And it's scary on two fronts. One of them is, why didn't the guy hire me? And I can tell you why he didn't hire me. He made a decision based on price. He found somebody that would do it for less money. And second of all, they gave way too much information to the state of California. Those are two very fatal things. The tax bill is over $1 million. So what the state of California wants is over $1 million in taxes, penalties, fines, interest, whatever their socialist viewpoint is to steal your money. But the bill is over $1 million. And it doesn't have to be. Too much information was provided. And I can tell you from my point of view, someone inside the state of California is misapplying their own historical records, and they're misapplying what's applied through the IRS, which has nothing to do, if you look into California laws and regulations, there's nothing about this particular viewpoint, which I cannot divulge to you, okay, because it'll give them too much of a heads up. But they're doing it wrong. And my guess is they know they're doing it wrong. Why? Because they've been bullying people for years. And their answer is always, we've always been doing it that way. That's how the first functional use test was designed in the interstate commerce test. Someone just woke up one day and wrote something into life, and they say they've always done it that way. And I could prove to them that they didn't, but it didn't matter. It absolutely didn't matter. Whoever these people are, they can sit in their offices and just say, we've always done it that way, and you have to accept it. And as long as you know that the tax agency is willing to take that position with you, why wouldn't you protect yourself? You have to protect yourself. You have a duty and an obligation and a responsibility to yourself and your family and your company to not pay these taxes and fees to a completely corrupt government. That's my opinion, and I'm sticking to it. If you shop your tax consultant by price, why would you do that? You're going to spend $5 million or $25 million or $70 million or even $1 million on an airplane, and you're going to try to save a couple of $1,000s on your tax advice? It's, you know, unless you believe that you can finance the rest of your life by the amount of times you're going to win a lotto, it makes absolutely no sense. Absolutely no sense. And when you're dealing with a state agency like California, that at a whim, they'll change the way they look at information. Okay, and I guarantee you that happens every damn day. You have to understand how to communicate and how to deal with these people. And I will tell you that from my point of view, every aircraft that's had to pay tax was because of some information provided to the state of California by the taxpayer. So you have to understand how to communicate with them. You have to understand what information you're going to give them. If you take the viewpoint that they're going to shoot you and burn your house down and fuck up your wife and family and your kids and eat them for lunch, okay, you have to see that much danger in how all this stuff is. I'm not suggesting to you that anybody at the state of California would actually operate that way, but you need to get your mind right about how dangerous all of these interactions with any tax agency is. If you look at them like a voracious animal who wants to eat you, then you got to be more careful about what you do and how you communicate with them. You have to understand whatever their focus is, it's always got a common denominator regardless of what tax agency is. And that focus is they want your money. They think they're entitled to your money. They're socialists, okay? No capitalist would ever allow there to be any form of taxes, okay? That's just my opinion, but I'm always right. Sam, don't forget to unmute your audio and take it away.
Okay. Thanks, Tom. Good morning, good afternoon, everybody, and thanks for spending a little bit of time with us. My name is Sam Harris. I'm the president of JetLoan Capital. We are an independent aviation loan broker. All we do is aircraft financing, everything from general aviation piston aircraft up to turboprops, large cabin jets. So we participate pretty much in the entire aviation lending market, some helicopters, do some international, etc. So I'm going to take you through an overview of the aviation lending market as we see it. It's really changed a lot over the years, and it's also changed a lot since the financial crisis of 2008. A couple of stats. So 50 years ago, there were over 14,000 banks in the United States. And then after the financial crisis, for a variety of reasons, including Dodd-Frank, regulation, interest rates being near zero, economic problems, there were very few new bank openings, and in fact, there was a lot of consolidation happening at that time. There were, banks that were in trouble because of the financial crisis, so there weren't new banks opening, and there were a lot being merged. So where we ended up today is that the big banks have gotten bigger. Right now, the 10 largest U.S. banks have over $10 trillion in assets. Today, there are just over 5,000 banks in the U.S., and as we said from the bullet up top, there were 14,000 banks 15 years ago. So now we have 5,000 banks, with the big banks being very big. Another stat says that there are 1,700 banks in the U.S. with assets over 300 million, which is fairly large, not large compared to Bank of America or Chase, but large, and they're not even household names. So what I'm trying to illustrate here is that, and especially relative to the rest of the world, there are still a lot of U.S. banks, a lot of U.S. lending capacity, and sizable institutions. The last bullet just says that these banks are looking to deploy capital, meaning that after the financial crisis, a lot of banks stopped lending. They were trying to manage their portfolios and losses, and it was, really a chaotic environment. And so for a while, banks weren't lending, and then several years after the financial crisis, where things started to come back to a little bit of normal, these banks realized, hey, we're banks. We can't make money if we don't lend. So now, fast forward 2018, there are a lot of banks out there, and and they want to lend. That's how they make money. So if you are an aircraft borrower, you're purchasing an aircraft and you, rather than pay cash, you want to borrow, there's various types of funding sources in the market that you can borrow from. They're banks, leasing companies, credit unions, and private equity funding sources. Those are the primary ones that we deal with. Who knows, there could be another one or two we've missed, but those are the ones that we deal with on a regular basis. The different banks and leasing companies, credit unions, etc., they all seem to play in different markets and niches. Now, there could be, several of each of these lenders in any given niche, but to generalize, we see lenders that like to lend on, for instance, pistons and turboprops. And these tend to be primarily smaller banks and credit unions, and we call this the general aviation lending space. And there are certain of these smaller banks that like to lend there. And then if we step it up a little bit to light jets and mid-sized jets, there's another sort of tier or set of banks that like to lend there. Those deals might be too big for the smaller banks that like to lend in more the general aviation space. And then we have, further sort of segmenting where some of the big banks like to lend on large cabin airplanes. There are some lenders that are lending in the international arena, non-U.S., things outside of the U.S. There's not a lot of product there, especially since the financial crisis, and it really hasn't come back much. So there is some international funding available, but there's not a lot of it based on what we see. And then you can take the U.S. and break it down. There's some of these banks like to lend, they'll lend in anywhere in the U.S., and some of them will only lend in certain regions of the U.S. And further, some of these banks are lending by borrower type, client type. So there's certain types of industries that they will lend to and they won't lend to. For instance, some banks won't lend to folks in the real estate business, and some will. We also have seen a lot of banks that won't lend to casinos or gambling and other such things like that. So they break it down by client industry. They further break things down by certain geographical constraints that they'll lend into, like I mentioned before. Some banks will lend nationwide, others will only lend in certain regions. Some of these banks like to lend to high net worth individuals versus corporations, and vice versa. Some will only lend to corporates, and they don't want to lend to high net worth individuals. There's also a lot of distinction by aircraft type and aircraft age. Many of the banks only lend on certain types of airplanes, and many banks have restrictions as to aircraft age. A lot of them won't lend on an aircraft that's 15 to 20 years or older. That's more prevalent in the jet market than it is in the general aviation lending market, but there are age restrictions and hour restrictions, and it varies from bank to bank. Aircraft usage is also a big factor, charter being the biggest factor. So if you're going to buy a jet and you're going to charter it out, some of the banks are okay with that, others aren't. Some are okay if you're going to use it 50% of the time, in a Part 91 application, and then maybe the other 50% of the time it's going to be chartered. Typically that's okay, but it varies pretty drastically from lending institution to lending institution. Are there any questions?
Sam?
Yeah.
Yeah, Sam, this is Tom. I have a question. Is the concern about charter the fact that there's more usage being put on the airplane so that at the end of the loan period, if they had to repossess it, it would have less value? Is that the primary motivator to not take on charter?
Well, yeah, it is, but it goes a little bit deeper than that. So, you know, back prior to the financial crisis in 2008, there was a lot of lending going on. There were probably people buying jets that probably shouldn't have, you know, if you evaluated their credit, and things got a little fast and loose, you know, where the banks were, you know, making 100% loans. They were taking greater risk with the credit. And when all this was happening, you'd get a management company that would tell a prospective aircraft purchaser, hey, go buy this airplane. We'll charter it out 600 hours a year. You're going to make money and fly for free. Well, those arrangements, and we saw a lot of that happen back in the day, those arrangements usually ended pretty poorly. And then the bank was sort of stuck in the middle between the management company and the borrower. They had a falling out. Now there's liens on the airplane, and it just became really messy. So I think part of it is based on the banks just don't want a lot of hours on the airplane, but somebody that was buying the airplane strictly for charter, that didn't seem to work out well.
Got it. Thank you for the answer.
Yeah. So now I'm just going to break down sort of these banks. It's a generalization, but we're in all these markets, but smaller and sort of mid-sized banks and then larger banks. So the smaller banks and credit unions we see in the general aviation lending space for pistons and smaller turboprops, you know, both new and used. You know, these can be, you know, Cirruses, TBMs, such like that, and even smaller pistons. These banks will generally, their criteria, and this will be the same for each one of these slides, but these banks tend to make what I would call smaller loans, maybe as small as 50,000 and maybe as large as $1 million to $1.5 million. So they're restricted by dollar amounts, minimum and maximum dollar amounts. And all of these banks, sort of by whatever policies they've set, you know, they have these restrictions. So in the GA lending market, general aviation space, we see loan terms from 15 to 20 years. And I'll explain later when we get into jets, the terms of those loans that those banks do, the terms will be shorter, the amortizations will be longer, but they balloon. But what's unique in the GA market is that these lenders will actually write you a 15 to 20 year loan. So we'll get into more of that later. And like I said, amortization's up to 20 years. Right now, what we're seeing is fixed interest rates in the kind of the low to middle fives. The days of 4% money are mostly over. Rates have gone up 3/4 to a point or so in the last 12 months. So last year at this time, I think we were doing some of these loans in the 4% range. Today, those are more like 5%. These lenders typically will lend 75 to 80% LTV. So 75 to 80% of the purchase price of the aircraft, subject to appraisal, is where these banks, generally speaking, you know, we probably have 10 of these banks that we work with. So I'm generalizing a little bit, but this, you know, this tends to be generally true for the group.
I have another question. I have another question coming in for you.
Please.
I see that you're talking about several different lending institutions, so I'm a bit confused. What is your role? Do you broker for all these banks, or can you define for me exactly where you fit into this?
Yeah, sorry about that. I made mention in the beginning, we are an independent aviation loan broker. So we do place loans with these banks, with all of these banks. We do very little underwriting and holding of assets ourselves. We will do some in specialized circumstances. We have some funds to do that. But if we're doing what I call a normal retail transaction, where we have a strong borrower, business person, you know, affluent individual that wants to buy an airplane and do a term loan on it, we generally take those to our funding sources, our banks and credit unions, and we place that transaction with that financial institution.
Got it. Thank you.
Thank you for that. Okay, so then, so I'm with the smaller banks, General Aviation right now, and then I'm going to take a step up and talk about some of the smaller to middle-sized banks. These banks are larger in asset size than the group that I just discussed, and so they like to do larger loan amounts. So this is a different group of banks. They're a little bigger than the group before. To generalize, they like to high net worth individuals, entrepreneurial business people. The loan amounts probably from, their minimum loan amount could be $500,000 to $5 million, sort of in that range. So if we had a client with a smaller loan, we'd be back to the group that I mentioned on the previous slide. This group is going to, $100,000, $250,000 loan is too small for them by policy, and a $6 million loan is probably too big. So they tend to be in the $500,000 to maybe $5 million loan amount range is where they like to play. A little bit different approach here, and it's more the same on the jet side too. These banks tend to write loans that have terms of 5 to 6 years. So the typical structure on a nice newer-ish airplane, mainstream airplane, would be a 5-year term, loan term, and an amortization period of 15 years. So after 5 years, there's going to be a balloon, the loan's going to mature, there's going to be a balloon with the outstanding principal balance, and then at that time, the borrower is going to have to refinance. So in more of the smaller general aviation space, you can actually do a 15 or 20-year loan. So you've got it as long as you want it out to 15 to 20 years. Here it's more common on these slightly bigger deals. You're going to have to refinance it every 5 years, maybe every 7 years. Amortization periods here, typically as long as about 15 years. We don't see 20-year amortization so much on this or in the next one. It tends to max out at more like 15 years. On a case-by-case basis, we have a picture of a Pilatus here. Banks really like the Pilatuses, and some of them will stretch out a little farther, but by and large, the amortizations are a touch shorter. Right now, fixed interest rates are similar in the low to mid 5s. These banks will advance a little bit more, say 75 to 90%. So some of these banks will lend you up to 90% of the purchase price of the aircraft. And then we're going to move on. I think I got out of okay, we're going to go on to the larger banks. These are names like Chase or B of A and or some really big regionals. These banks like to lend on big airplanes, mid-cabin, large cabin, newer aircraft. They're lending to what we call ultra high net worth individuals and large corporates. And don't call these guys if you have a loan amount less than $5 million, because they're not, Steve. They like to lend in the $5 to $50 million or more. There's not a lot of airplanes out there from $50 million for a loan amount, but a few. But they like to play in the super mid and the big cabin space to very wealthy individuals. In the loan structures here are more like the last one, 5 to 7 year terms to a balloon, amortizations 15 years. The interest rates are probably a little bit lower here because you're talking about very, very high net worth people, they can still borrow in the middle to high 4s in some cases, mid 4s to maybe 5%. So they can, these are very wealthy people. They're borrowing at a little bit lower rates. And in some cases, in terms of loan amounts, some of these banks will lend between 75 and 100%. So if you are a very wealthy individual and you want to borrow 100% of the aircraft, they'll lend it to you. A couple other things here. Age is a very big factor. These banks want to lend on newer airplanes, probably newer than 15 years. Um, Also, these banks want to see that the plane is on an engine maintenance program. By definition, we're talking jets here. They need to be on engine programs. They don't want to lend to older aircraft. And I will mention here on these bigger types of loans, you can also do some variable rate lending if you prefer, although right now almost everybody's doing fixed because they think rates are going up. But you can do some variable rate borrowing at 30-day LIBOR plus, some kind of a spread. So, but most of the borrowing in general across all these lines, everybody's fixing these days because they think rates are going up. So here today, where we are compared to where we were even just a year ago, like I mentioned before, interest rates have gone up 75 to 100 basis points since this time last year. We could get money at 4% last year. Now it's 5%. For the most part, everybody seems to think rates are going to continue going up. Another observation is about lender discipline. Back before the financial crisis, there was a lot of, looser lending. The banks weren't watching the credit quality as closely. All these things were happening, which contributed to the financial crisis. Today, even though there's a lot of competition for loans, we see that these lenders are really staying pretty disciplined about their credit criteria, so that even though the market's kind of come back, it almost feels like in terms of activity and volume, it's like back to pre-2008, but sort of some of the lending practices that were aggressive back then that were going on, that doesn't seem to be happening today. And there does seem to be a lot of deal activity across all of these lines, general aviation, mid-jets, big cabin. I mean, more or less from what we hear, everything is moving. We hear that, certain types of airplanes, if you want one right now, a used airplane, it might be hard to find. There's a buying activity in it. And this is really new in the last year and a half, 2 years, really since 2009 up until a couple of years ago. Prices on aircraft were continuing to fall. Now they seem like they've stabilized. There's buying activity. It's supply and demand. So these prices are stabilizing. Another stat I threw in here was we think that 50% of the aircraft purchases are cash and maybe the other 50% are being couple of observations as to why lenders are in the aviation lending space. There's a lot of new lenders that have come in over the last 5 years. There are more coming in every day as the economy gets better. Some of the big names in the space during my 25-year career have gone. For instance, GE Capital, they were the biggest lender in the private jet space for most of my career. And then they no longer exist. They were purchased by like a hedge fund. So some of the old names in the space are gone, and there's a lot of new names that have come in. Many small and large U.S. lenders are looking to grow assets. There's only so many larger assets out there you can lend on. A lot of them have a lot of real estate in their portfolio. They want to diversify. Some of the advantages of aircraft loans are that, they're typically a larger dollar amount. A truck might be $50,000, but an airplane could be a couple million. And so the bank views that they have all the same time and effort and work, so they'd rather make a larger loan than a smaller one, kind of in general. So they like that aspect. And then aircraft have a long, useful life and historically strong residual value. So relative to some other equipment assets that a bank could lend on, they view aircraft as being better collateral. They also like the fact that if they're lending on aircraft, these clients tend to be affluent, and it gives the bank cross-selling opportunities to sell them other products like wealth management. So these are the kind of clients that own aircraft are the kind of clients a lot of these banks want to have in their portfolio. I've included our financing checklist. We send this around to our clients when they ask us for a financing proposal. There's a lot of factors that really affect which banks will fund the transaction and what the rates and terms are going to look like. So what do lenders require? I'm not going to read the entire checklist, but I'm going to move down midway down. They're interested in the aircraft usage. Where's the airplane going to be domiciled? Is it Part 91 or is it Part 135? How many hours a year is it going to fly? How much of that is charter versus Part 91? If it's a jet maintenance program, because most of the banks that lend in that space are going to want the plane on a program. We have some that don't. We can get transactions done for jets that aren't on engine programs, but it probably eliminates 90% of our funding sources if there's not an engine program on the aircraft. So that's always plane professionally managed. Does the client have their own flight department? And they're also going to want to know, has this borrower previously owned aircraft? So those are the kind of things that need to be identified so that we can figure out which funding sources are most applicable for any given certain borrower. And then I dropped down here to, these are some of the financial statement requirements. If it's an individual borrower, and in most cases, unless it's a large corporate, the principal of the company is going to guarantee the loan. So they're going to be an individual borrower in most cases. The bank's going to want a personal financial statement, signed and dated, no more than 6 months old. The bank is going to want 2 to 3 years full income tax returns, not the first 2 pages, the entire return. Doesn't matter if it's 2 feet thick, which some of them are. They're going to want the entire return, including K1s. They're also going to want bank and brokerage statements that verify any liquid assets listed on their financial statement. If they list $5 million cash on their personal financial statement, the bank's going to want to see a copy of that bank statement that verifies that. This other thing about driver's license, pilot's license, this is more just for smaller transactions on GA aircraft. It doesn't apply to a larger jet. In terms of a corporate borrower, it is a little more simple. The bank's going to want the last 3 years worth of financial statements, probably audited, could be publicly traded company, but they're going to want 3 years worth of financial statements and a current interim statement. So if, we have borrowers come to us all the time and they say, I want a proposal on buying this aircraft. And so we say, okay, well, can you provide us this information? Well, we don't want to do that. Well, all right, so let's walk through it. We need to know how the airplane is going to be used. That's going to dictate the funding source to a large degree. And we also have to have an idea what their financial statements look like. If we don't have it, we're really kind of making a guess because the terms are going to vary greatly. We will try to, if they don't want to provide financials, we'll try to ballpark them the best we can. No guarantees, because until we see those financials, we don't really know. So if you want to get if you're calling a bank or a finance broker and you want to get an accurate financing proposal, you should be prepared to disclose this information. Okay.
Sam, I have a question. Can you back up to the last slide?
Sure.
Can you back up to the last slide?
I'm trying to. Okay.
Okay. When you go down that list of items that are under the preliminary financing checklist, all of them are kind of on the person who's sending us in said all of them are blue until you get down to the engine maintenance plan, and that is white and has no line under it. Is there any specific meaning to that section?
I think that that's some kind of a typo or mistake. There's nothing that should have been special about that. It's somehow just the way that form appeared on a screen. That form is actually a PDF that is, you can populate it. So yeah, that's kind of a mistake. There's nothing magic about that.
Okay, thank you.
Okay. This is a little bit self-serving, but we're an aviation loan broker, so why would you work with us rather than call a bank directly? So, our only business is doing aircraft loans, so we're reviewing the capital markets on a daily basis. We're reaching out, talking to dozens of lenders about multiple transactions every day, and so we have a very good sense of who's doing what, who's hot, who's cold. I mean, I was working on a deal today on a Pilatus, and the bank that I was working with that had the best terms told me that they had a great year and they're basically full. They don't need any more. They don't want any more loans between now and the end of the year. So I switched gears and went to another one of our banks that was very interested in having this transaction before the end of the year. So there's so many factors that go on. They come into the market, they go out of the market, they're hot, they're cold, that board changes the policy. So, we're the ones that are kind of dealing with this every day. So we tend to have a pretty good sense. In our case, we're working with over 100 different diversified funding sources at any one time. We keep them all in a database, segmented out by the kinds of things that they do, what their criteria are. We can obtain financing for older aircraft. Now, in pistons and turbos, this isn't so much an issue, but jets it is. If the jet is older than 15 or 20 years, a lot of the big banks don't want to lend on that. We have plenty of regional players that will. In our case, we don't just place the loan, but we stay involved all the way through to help facilitate an efficient process in closing. We help the bank in the through all the way through the end of the process. And it's efficient too, because we've been in the business a long time. If we get the information from a couple of slides ago on aircraft usage and financials, we're going to know in a matter of minutes, which bank or banks are going to be the best players for that transaction. So it makes it pretty efficient from that standpoint. I just call this takeaways. The market in general, there are aircraft lenders in the space than there were several years ago, and that's good for borrowers. There's competition for loans, and that's good for the borrower. There's a very wide range of financing available for almost any type of aircraft loan transaction, and it does tend to vary a lot from bank to bank. Not that there's not 5 banks doing the same thing, but if you look at 50 banks, you'll find out that they're doing very different things in terms of underwriting and economic rates and terms that they'll issue. So loan terms vary greatly. And then just, in general, the aircraft purchasing and lending activity right now is very robust. It's pleasantly robust compared to what it was 2 years ago. The market was really pretty slow for an extended period of time, but it's picked up in the last year and a half, 2 years, and there's a lot of lending activity. Aircraft brokers are selling planes, the manufacturers are selling planes, and lenders are happy to lend. So it's a pretty good time in the industry.
Okay, I have a new question. Does your particular organization have a sweet spot in terms of types of aircraft or types of loans that it prefers to deal with, or are you, as I could gather from this presentation, open to everything?
We're open to everything, and we have done, everything from what, I would call a rather simple loan. If you have a strong borrower and a good asset, we can find cheap money. If you have a transaction that is what I would call to be slightly edgier for a variety of reasons, maybe we have a colorful borrower. We've done some of those. Maybe banks don't like those. Banks don't like reputational sort of risk or noise, as we call it. So we might take that to a leasing company, a non-bank, or a private equity. So we have done a very, very wide range of transactions, and theoretically we can do almost anything. But we tend to play a lot. We tend to play a lot in loan amounts from about 500,000 to 10 million with high net worth individuals and entrepreneurs, because they tend to need our expertise more so than a Fortune 1000 corporation that has a CFO and several controllers. And if they're going to buy an airplane, they're probably just going to call the 10 banks that are in their bank group and give it to one of them. So it's not that we don't do some large cabin airplanes for big companies, because we do, but we tend to be more a $500,000 to 10 million for entrepreneurs.
What percentage of your loan portfolio or loan experience in 2018 was the smaller pistons and turboprops?
I'd have to take a look at that. I mean, so far we've done about 60 or 70 transactions. There's a lot of smaller ones in there, right? So, they easily have.
Really?
Easily half is represented by, and that's new for us because my history was basically doing larger jet transactions through my banking career.
Okay.
So that's what we were doing a couple of years ago. And then we said, well, wait a minute. There's a lot of really good general aviation airplanes out there. And if you look at it by number and look at piston airplanes and turboprops, there's a lot of those airplanes out there, a lot more than there are jets. And then we've also found, if we handle the client's first airplane, he comes back to us, again and again and again, because most of these people, they have a passion for aviation. And if their business is doing well and they can afford it, they typically tend to move up, a piston, a turboprop, and a jet. And so we decided we want to catch them earlier on in the cycle and stay with them.
Okay, I have something I want to add to the answer to the question that was just asked. I think that what Sam is offering is a very unusual thing, because I'm in the aviation transaction business with my California clients. A lot of them are frustrated because they're locked out of borrowing areas, because where they go have a tendency to have minimums, or they don't want to deal with the pistons or the turbines. So the fact that you can go to someone who has the experience that Sam's company does, and does large cabins, mid-size, and also offers financing to the, quote, smaller airplanes, they're not small to the person who's buying them. So I think he's really someone that everybody who is on this webinar should consider using, because you want to establish this relationship with your first airplane and continue it with Sam through your 10th or your 15th airplane. And this is in my opinion, this is an absolutely great service. And I can guarantee you that Sam didn't pay me to say what I just said. I'm just talking from my experience.
I appreciate that. Thanks, Tom.
Are there any more questions? Sam, is there anything you'd like to add that you just thought of that you feel like you didn't cover?
I don't think so. It was just, trying to, give an overview of what's happening out there. If somebody wants to go, borrow money for an airplane, I don't really think I can add anything more to that. I'm happy to, if somebody thinks of something, they can reach out and give me a call. Happy to take any calls at any time and provide any assistance that anyone needs.
Okay, would you take your PowerPoint back to the front page that has your phone number on it, so in case anyone didn't see it?
Okay, thank you for that.
There it is, right there. Okay, I'm telling you right now, if you or one of your customers wants to buy an airplane and he's having any kind of slowdowns or stalls in the process, call Sam. There's the number. And this entire webinar is going to live its life permanently on our website. So all of you will have a link to it so you can see it. Everybody who's attended it, so you can watch this over and over and over again. But I think if you're trying to put together a deal in an aircraft transaction where somebody wants to move quickly and you want to deal with someone who knows what they're doing, call Sam.
Thanks, Tom. Appreciate your time.
I don't see any more questions, so I think we're going to end this 45 minutes of ultimate wisdom. And I'm glad to talk to you, Sam. And if anything comes up in your experience that our public needs to know about, just get in touch with Kelsey in our office, who's the new contact who's running our webinars now. And between Sam and I, we'll figure out a way to let you all know everything that's going on.
Okay, sounds great. Happy to help any way we can.
Okay, end of event.